Hi and Assalamu alaikum. The term accounting. Accounting is not a new term. It is as old as the ancient civilization is. Some people say that it's around 700,000 years ago old term. Initially, it was only the writing and counting of the money. Romans were the first one where the government had the access to all the financial information of the organizations. One Italian, Luca Pacioli, was considered to be the father of the bookkeeping and accounting. This was a very little brief about the accounting. Who will be the beneficiaries of our lecture today? The students, newcomers in the field of accounting, finance, and even the audit, professionals, entrepreneurs, owners, and the people who want to invest money in stock and commodities. Nowadays, people are thinking to have some second source of income, and internet and web is making this thing very easy. But before investing, you must have some knowledge about this all accounting related thing. Once you will hear this lecture, I am 100% sure that you will convert your time into some valuable or the beneficial information that can be used at later at any part of your life. Today we will be discussing the standards, the International Accounting Standards. International Accounting Standard issued by International Accounting Standard Board, a non-profit organization. It was 1973 where International Accounting Standard Committee issued these standards. Here some questions might click your mind that what was or what is the purpose of these standards? So the answer is there are three main purpose, goals or objective of these standards. The first one is to make the things easy for comparing the businesses worldwide. Second, to increase the transparency and trust in the financial reporting. And the third one is foster global trade and investment. There are around 7 continents and 194 countries in the world. Every country has its own laws, governing bodies. So it was a very difficult thing to converge all these laws at one place. So what International Accounting Standard Board did, they developed a single set of high quality accounting standard with the consent of the different countries through their representatives. European Union applied these standards right away, leaving US and Japan where the voluntary adoption is. Means the global companies can adopt these standards, but the companies running in these two countries they have to apply the local applicable laws. In US you have to apply generally accepted accounting principles. And China has their own set of standards. Till 2018, 144 countries are following these standards. So today we will be discussing International Accounting Standard number 1. International Accounting Standard number 1. International Accounting Standard number 1, the name is Presentation of Financial Statements. I'm pretty much sure that when you will hear this lecture, you will be able to understand this term financial statements, what are the parts, and whenever this thing will be discussed in any of your meeting, you will be having a very healthy discussion and you can participate in that discussion really easily. The outline of our presentation is objective and scope, features and components of financial statements, content and structure. What comprises of these financial statements and what is the content and structure of the financial statement. So we will be discussing this thing. Objective: to demonstrate the basis for the presentation of financial statements. Obviously, when we are making some things, there are some bases. So we are talking about this international accounting standards. So we have some common bases. So and the financial statements prepared in one part of the country is equally understandable in second uh, country of the world. So what we have to do is we have to demonstrate the basis for the presentation of financial statements. Secondly, to verify the compatibility, last year entities financial statements. Later on, when you will be going through this lecture, you will find that what is the importance of showing the last year's results. So as a user, obviously the coming slide will be the users of the financial statements. So it's really important for the users to have some historical information as well. So it is very important and necessary to give the last year's financial statements or results. And lastly, tell overall requirements. What are the requirements for making those financial statements? Minimum requirement, what minimum information that needs to be shown or presented in the financial statements, and instructions for the structure and content of the financial statements. So what the standard did is they gave a sound basis, unified basis or instruction that what content will be the part of the financial statements. The scope of IAS. This standard will be applied to all general purpose financial statements prepared under the guidelines of International Financial Reporting Standards. There might be some organization where the IFRS cannot be applied. That can be the size of the organization. For example, in some countries, the single member company or the entrepreneurs or the sole proprietors or the small companies where it is not mandatory to apply the International Financial Reporting Standards. And what the general purpose mean is considered to meet the needs of the users who are not in a position to require an entities to prepare the reports tailored to their particular information needs. Before going to this thing, let me explain you the who are the users of the financial statements. This also are covered under the scope of the International Accounting Standard number one. The users of the financial statements might be any of these, and this list is not exhaustive. There might be some other. The management of the company, the people who are steering or running the company. These are the strategic people who are just running the company, and they are the decision makers. Investors, the people who invest their money in the organization, they are also the user of financial statements. The customers, from which that company has any relation with respect to the purchase and sale, the customers. Competitors, whenever you are registered under any governing body, so you have to publish or submit your financial statements to the other organization. So sometimes the competitor is also using your information. The government agencies like the taxation authorities or any security exchange or any other governing body, employees, the employees will also be using the financial statements. Investment analyst, the credit rating agencies, lenders, rating agencies, and suppliers. So these are the typical normal users of financial statements. So why I gave the view of this user of the financial statement is because the general purpose means considered to meet the needs of the users who are not in a position to require an entity to prepare reports tailored to their particular information. In these users, there are few who can ask the company to tailor their reports, but few users are where the users cannot ask the company to tailor or amend any sort of information for them, like customers, employees, investment analysts, rating agencies, or even the supplier. But some users, like the management of the company, they can ask the company to make the reports used by them on the basis of which they can make some analysis. So this is a little bit different. What is the general purpose? So general purpose, because what International Accounting Standard is doing, financial reporting standard, they are protecting the rights of the users who cannot ask the company to just tailor their reports, but they make the minimum requirements and the basic information that they consider to be the necessary for presenting in the financial statement, so the user can take the decision very easily. Who are the users? Those are not in the position to require an entity to prepare to report their material needs, for example, potential investor, potential shareholder, or the researcher, including the students. So they cannot ask the company to make the reports as required by them. The components of financial statements means what comprise of financial statements. If we call the financial statements, there are five main components. Statement of financial position as at the end of the period, statement of comprehensive income for the period, statement of changes in equity for the period, statement of cash flow for the period, and notes comprising summary of significant accounting policies and other explanatory information. So, if you see that this thing, statement of financial position as at, this is normally at some date. The statement of comprehensive income for the periods comprising normally the period is 1 year accounting period. Statement of changes in equity for the period is also for 1 year. Statement of cash flow for the period and notes. The major part, when you will be seeing any financial statements, you will see that the major parts will be the notes, where the details or any information that you cannot present in all these things, and you have to give a little bit of the details as per the accounting standard or applicable law. So you have to show these things in the notes. Reason to provide notes to the financial statement. As I said that the major part of the financial statement will be the notes. Later on, I will show you some of the results of the financial statements. Necessary supportive information assisting the statement of financial position, statement of comprehensive income, statement of changes in equity, and statement of cash flow. Means when you will be preparing all these four statements, any supportive information where the applicable laws consider that the detail or the supporting information is necessary, you have to present, the organization have to present that necessary information in notes to the financial statements, because these are some of the pet uh, performers or formats. So you cannot give the detail in on the face of these things, but in the notes you have to give the descriptive narration or the detailed breakup of the item presented. Later on again, once in the I will present you in another lecture where I will show you some of the financial statements and how we read the financial statement, so this thing will be very much clear. Any other necessary information that do not qualify for the recognition in the main component of financial statements but can impact the user's decision. I can give you a small example of this. For example, in the statement of financial position or the comprehensive income or statement of comprehensive income, there was one expense related to some legal thing. You have hired a one lawyer, but that case is under litigation that has not yet been finalized, but it is very probable that you will win or lose the case. So you have to tell this thing in the notes to the financial statements. Any other necessary information that do not qualify for the recognition in the main components of financial statements means you are not sure that you will win or lose the case, but you have some what you can say prudence or intuition that thing will be either in your favor or against. So right now it does not qualify for the recognition, but if that decision will make the impact of the user's decision totally different, you have to present that thing. So this is the reason why the notes to the financial statements are necessary part of the financial statements. The components or general feature of financial statements. Now these are the financial results. So these results must give the true and fair view. Now what is the true and fair view? Financial statements shall give true and fair view of its financial position, performance, and cash flow. Again, this is the first lecture, so maybe you will not getting the exact thing which I wanted to share. But later on, with the passage of time, when you will be very much familiar with the terms, you will come to know that this position means the financial position, means the statement of financial position, or normally called the balance sheet. Performance means the profit and loss or statement of comprehensive income and cash flows. So all the financial figures in these things must give the true and fair view. What is true and fair view? Actual representation of the effects of the transaction. We do not record anything on the basis of some assumptions. The thing must give true and fair view. Items are presented as per guidelines for the recording assets, liabilities, income, and expenses set out in the framework as per the definition and criteria. For example, you have to record any asset. It might be tangible or intangible. There are few guidelines. We have later on the standards which shows that, which gives the clear instruction that you have to record those assets. So that asset must give the true and fair view. Means it is giving the actual position or actual figures. So the user can make a decision really with ease. True and fair view of the financial statements. An explicit and unreserved statement of compliance with the IFRS and the notes should be given in the financial statements. Now, this is the actual part of the financial statements. I have extracted the accounting policy thing and mentioned here is, and you have to explicitly give the statement, unreserved statement. The consolidated financial statements comply with the IFRS issued by the International Accounting Standard Board and any Swiss law, that was the local law. Sometimes we have to follow the IFRS and also the local laws. So you will not only say this. The above statement should only be provided if the entity is complying with the IFRS. So how the you are sure that whether these people are complying the IFRS? These financial statements are audited by a third party, some auditing firm. So that will just check all these things, and then they issue a report. Yes, the financial statements are giving the true and fair view. So you have to write this explicitly in the accounting policies. We also discussed in the start that we will be discussing the comparative information. The disclosure of comparative information is must. What is comparative? All the figures presented in the financial statement must also contain the previous figures. So I will zoom this. Income statement for the year ended 31st December 2018. Now this is the results of 2018, and these are the 2017. So it's really easy for you. Income from the group companies last year it was around 12 million, now it's 15 million. So as a user, you will have some information or the concept that the income is increasing. Profits on the disposal of assets 155 and 2.1. Other income was 96 and 110. So expenses, we can take one more example. Expenses recharge from the group companies 2.5, 2.5 around same. Other expenses 155 and 196. Profit for the year 8.5 and 12.2. So on the bottom line, if I am the user of these financial statements, maybe I want to invest or I want to purchase the share of this organization, what I will see is the profit in the 2017 was around 8.5. Now it's 12.2. So means the profit is increasing. So apparently, it is said that it increased my trust, so I can invest in this organization. So this was the first part of International Accounting Standard. Later on, I will make another second part of this lecture. You will be able to grasp the full concepts given in this International Accounting Standard. So subscribe my channel. Give your feedback in the comments. If you have any question, you can also ask the question in the comment section. Thank you.